Hello everyone, so welcome to US30 recapping Friday and Monday the 16th of February. So today was a US holiday, so we're going to do Friday first, then go over to today. All the links you can want are in the video description. Now let's get on with it. So the trade templates were in the last video, and we're just going to focus on the New York session today. Just to give you an idea, or I'll be here all day. So we need pre-New York, high volume time, and then the New York Open like that. And we get a little arrow out and we have a line like that to show the main liquidity pools. That straight. So you can see there. First of all, you can see here we've got the Asian session high. That means from this market open, the new day, this was the high for the Asian session and the London session. So this is a major liquidity pool. And you can see price cleared it there. So now we have to go for the pre-New York, which is 1 p.m. UK time. On this chart it shows as 1500 hours. And that goes there. Then half hour later we've got the high volume time, which goes there. So that is the first area. So this is a early sell setup. We have pre-New York, high volume time is pushing up towards the upside. It's pushing towards a premium sell area or a liquidity pool. Major liquidity pool is this Asian session high. So you can see we just about take that, and then we start to see some resistance and price starts to reverse. That is giving you a nice clear sell setup. Once price goes through here, you manage your trade when it gets towards these blue lines. Then we go on to, so that is a nice clear sell bias like that. Let me just put that there because I'm going to need that area. Then we move on to the New York Open, which is here. I put an arrow on. So this candle here is the New York Open. So this gives you another template. This is when we move on. We wait for price to move towards a key liquidity pool, which is pushing down. Taking this low, which is the London session low. You can see here. Then we start to reject quickly. So you can see how it's matching up the push to the upside with the early sell and then selling off. That sell goes into the New York Open, which matches the early sell, which is giving you a bearish bias. That pushes down, takes major liquidity. So in this area, you would look for points of rejection. You can see it starts to reject quite heavily. So on that downwards move, you'd have made profits. By this time, you'd have took partial profits. And then you'd have probably, once you saw this coming back up, you'd have probably entered, stop loss at the low, and risked a bit less because you don't want to ruin all your profit you made from that downwards move. Price comes up. You can see we start to consolidate and retest these levels as we break through. And then you get the continuation towards the upside. So this downwards, once you break that New York Open, you get a retest here, another retest there, and continues towards the upside. So that would be the main trade. You wouldn't worry about this one here. So overall, something like that. This downwards move, you'd manage your trades by here. This upwards move, you'd manage your trades by here and take partial profits around there. So that is Friday. Today, you don't really focus on today's price action, but you can see how it's giving you bullish structure. It's retracing towards this discount buy area from Friday. So I'd be looking for a continuation towards the upside going into tomorrow. But today is a US holiday, so we don't really trade today. We wait for tomorrow, and these levels that you normally label up are going to be used the following day after US holiday to propel price in one direction. So for example, we get a level running along here, price will move up like that going into tomorrow, it'll come back, retest, and then continue towards the upside. That's how it normally happens after a US holiday. So message me if you've got any questions. All the links are in the video description. Take care, have a good day, and goodbye. 2 nice trades on Friday available.